We're about to delve into the world of FinTech that is reshaping industries and redefining the way we approach financial services. Today's discussion brings together a distinguished panel of experts, each with a deep understanding of FinTech landscape and a keen eye for strategies that resonate with an early stage ventures. As we explore the future trends and disruptive innovations in FinTech, we aim to equip entrepreneurs with knowledge and insights necessary to navigate the dynamic terrain. Our panelists bring a wealth of experience from FinTech ecosystem, offering a unique blend of expertise in technology, finance, and entrepreneurship. To moderate this session on future of FinTech and strategy for early stage entrepreneurs, I'd like to invite Ronit. Ronit is a second year undergraduate student at Plaksha studying data science, economics and business. His academic journey reflects his keen interest in integrating diverse fields to gain a holistic understanding of the rapidly evolving technological landscape. He aspires to carve a niche in the startup ecosystem and has been actively involved in cultivating the skills necessary for entrepreneurship. Let's make some noise to cheer Ronit on. Over to you, Ronit.
Thank you for the warm introduction, Ankita. Good afternoon, everyone. Welcome to our panel discussion on the future of FinTech and strategy for early stage entrepreneurs. Today, we have an esteemed panel of experts joining us in this discussion. Let's welcome them on stage. First, I'm pleased to invite Mr. Jayant Kharote with us. Mr. Kharote is an alumnus of IIM Calcutta. He's also the Vice President at Jefferies. He leads coverage in India Financial across FinTech, insurance and capital markets. He's also worked at Deutsche Bank, JM Financial and Credit Suisse. Next, please join me in welcoming Mr. Jags Raghavan. Mr. Raghavan is the co-founder of Multiple, world's first pen vesting app where you save now, pay later. Previously, he was the co-founder at Compute.io, which was later acquired by Cisco. Then he joined Cisco Launchpad to mentor and advise early stage startups. We're also honored to have Mr. Akarsh Naidu with us today. Please join us on stage. Mr. Naidu is an alumnus of the London School of Economics. He's currently the part of Reserve Bank Innovation Hub, which aims to promote innovation across financial sectors by leveraging technology and creating a fostering environment for innovation. Earlier, he was the co-founder and CEO at Startuppreneur, which is a UK-based end-to-end incubator platform. Mr. Naidu also led one of the best startup incubators in India, NSRCEL at IIM Bangalore. Last but certainly not the least, I'd like to invite Mr. Rajan Tavate to join us. Mr. Rajan heads innovation at NPCI's Bharat Bill Pay Limited, which is an integrated and interoperable bill payment system. He has over 7 years of experience in the bill payments application industry and 7+ years of experience in the mutual fund industry. Previously, he has been the vice president at JP Morgan Chase. An interesting point to note is that he was the co-founder of Zingo Cart, which was India's earliest e-commerce startups. Please give them a warm round of applause. We look forward to the discussion. So, like all panel discussions these days, we start by talking about AI. AI is permeating every field globally. How can FinTech adapt to this and capitalize on the changes brought by AI?
So as of now, AI is actually catching up very well all over the world. And one of the key things which is really catching up is generative AI. So when you talk about generative AI, what it means, you leverage the power of AI to do things automatically for you. Like for example, in one of the applications which we are actually developing, there are users who actually write to the system in a plain text language, in natural language processing. Then the request is sent to ChatGPT. ChatGPT generates the database statements out of that, and those are executed and the user is shown the data. Right? Earlier, what used to happen? People used to sit with the person, tell him that this is a report which I want. He would code that report, and then it will take maybe a half a day or 2 days, and that is being done in seconds. So what I feel is there is a lot of potential for this in the FinTech industry.
Thank you. It's really cold today, but no, I thought Bangalore was pleasant, but this is even colder. But nice to be with you all. In terms of AI, there's been a lot of thrust for us also as Reserve Bank Innovation Hub. One of the pillars that we are looking at is emerging technologies, and AI being, one of the most well-known emerging tech that we are seeing today. A couple of initiatives that we are taking in the emerging tech space is an accelerator program called FinAccelerator that we are doing along with BITS Pilani and ICICI Bank. We are identifying future first technologies that have an application in the fintech sector, and the way we have seen the kind of startups, there's a terminology called tech fin. So it's not just fintech but tech fin, where technologies from emerging technologies are applied in the financial services space. So we've seen a lot of startups whose core focus is AI, and they've seen use cases in the financial services space ranging from as simple as OCR. Primarily, there are a lot of documents that are submitted during KYC. Can AI be used to read these documents and sort of create more intelligent documentation for banks and financial services institutions? And of course, using models in terms of chatbots that can be used to service customers as well. So, these are some mainstream innovations that we are seeing today, but I'm sure there are more futuristic innovations that we'll cover in the other part of the panel. Thank you.
Yeah, AI has already become the mainstream application, I would say, especially in the fintech space. You can even predict what could be the market dynamics today. And in terms of lending, you can even see whether the person is going to be a potential defaulter or not, even before allocating the loan to the person. And same thing, if you want to be even more creative, how much you can make a person spend also can be predicted through your spending patterns through AI. So AI is going to be the mainstream, and it will change the way the things are operating right now.
I'll also echo the thoughts of my fellow panelists over here. What we hear from some of the scaled up fintechs is the first wave of AI is being used more from a efficiency perspective. So almost 10 to 15% is the range we hear that most of the large guys are aiming to save on the iterative tech spends, let's say from a 1 or 2 year perspective. But level 2, level 3, I completely agree with the panel over here. It will be focused more on the revenue side, more underwriting, refining, not just in lending, but also in insurance. There's a lot of work in claims that can be done real time with AI. So yeah, we will probably, I think, just scratching the surface right now, and then just thought probably a 3 to 5 year view that one can take. Yeah.
Okay. Now looking ahead, let's talk about FinTech 10 years from now. What are some changes that we are expecting, and what should young founders focus on?
So, in terms of technologies, broadly, if you were to classify FinTech, there are different areas like savings, payment, credit. Payments, of course, we've seen one of the major innovations through NPCI. And the next wave of innovation is going to happen in credit, one that Jags also mentioned in terms of underwriting, in terms of seeing whom to lend, how can we make it more frictionless, access to credit to different customer segments, because financial inclusion is going to be the thrust of, I would say the next decade. We are looking at a lot of customization that is going to come in. Today, financial products that you see are more one-size-fits-all kind of an approach, where they're more agnostic to different segments. But the future will be more personalization, customization. When I say this, there are women-centric financial products also likely to come out. Then for farmers, their credit needs are very different, and so are the needs of gig workers who are an emerging part of the workforce. Their credit needs and their repayment style is very, very different. So we have to now start looking at customizing financial products to each and every segment, and not just as a social cause, but as a proper business opportunity for fintechs to come. And I would say that apart from payments, we've sort of solved for it to a large extent. Cross-border is going to be the next frontier in payments per se. Savings, of course, more products to come in, and of course, Jags would be the right person to talk about that. And of course, this comes under the core sort of fintech mandate. Apart from that, there is investment tech and insure tech as well, which are allied areas within fintech. But customization and financial inclusion being the core of innovation for the next decade.
Yeah, I mean, 10 years from now is a way longer period to predict, but what I would suggest the next set of entrepreneurs to look at is hyper-personalization and global markets, like, for someone who can sit in India and look at different asset classes across the globe and start investing. Through AI, a lot of things can be achieved. This can also open up doors for security and vulnerability with deep tech innovations and stuff, like, So these are areas where people can think about creating new set of opportunities.
I think they've explained it very well. Just one thing to add, I think hyper-personalization is definitely one trend that will play out over the next 5 or even 10 years. Just along with that, one thing that we see is newer and newer models of sachetization. And I'm not talking only about credit. We're seeing this in insurance. We're seeing this in capital markets. So I don't know how many derivative traders are sitting out here, but what used to be a average of 1 day, 2 day holding period is now like a 30-minute thanks to fintechs. So sachetization will probably be something that moves alongside product development for the next, again, 5 to 10 year perspective. I think Jags is right in the midst of it, because you have Gen Z coming in, let's say the YOLO generation, right? So everybody wants to do a lot of things, but you need to price it accordingly and you need to underwrite the risk accordingly. And that's where sachetization, I think, is a very good plugin.
For the next 10 years, I actually see 4 key areas which are like going to play majorly. First off, the biggest one is them I call asset tokenization. So what is really going to happen is, like, you are going to have, like, let's say a flat of, let's say 2 crore rupees broker into, like, small asset tokenization on a blockchain, and people can actually, like, own just a small part of it. That's going to be very huge as we go ahead. Second thing is something called central bank digital currency, CBDC actually, right? So that is, like, just started in the retail market in a small space. It's going to go to the wholesale market, and probably, like, in the future, all the cross-border payments might happen using CBDC. And after that, I would also like to emphasize that, like, micro lending is catching up very well. So it has just, like, we have just, like, touched the surface, but it is, like, going to expand, like, it's going to cover, because of financial inclusion measures from RBI, it's going to go to a lot of places all over India actually. These are some of the key features for next 10 years.
Moving on, a recent report by SEBI highlights that only 27% of Indians are financially literate. What are some steps that Indian fintech founders can take to address this glaring problem?
So we need to provide a lot of educational materials to people to understand what the investment market is all about. Most of the time what people do is, like, the greediness comes into picture where they think, like, they can make quick money, which is not the case with investments. The moment you say investment, it's a long-term thing. Like, people forget that, and just because your friend said, like, invest in XYZ mutual fund or a stock, you go and invest. The next day the market goes down, you get panicked and pull the money out. That is not the way investment works. Like, so take time to understand what it is. Don't be a self-proclaimed investment advisors and start doing things, like, understand the market. There are a lot of materials, like, and don't look at Facebook influencers and stuff, like, and get wrong advice and do things like that's something which I would recommend.
I guess fintechs can actually, like, create simulated environments like games, like, where people can invest like dummy money and, like, in stock markets or mutual funds, and they can see how it plays out against the real market prices, and eventually in the process they will learn how to, like, invest. That is what I feel.
My next question is specifically to Mr. Jags. Fintech greatly relies on cultivating customer confidence. So in the early stage, how do you make sure that you grab this customer confidence?
Good question. especially when it comes to investment and savings kind of a thing, trust is more important, which cannot be acquired from the day one. So as long as you're providing a very authentic and value add to the user, people will automatically recognize those value and start trusting the platform. It takes time, but definitely it will reap in the end. Like, see, as a startup, you cannot have Salman Khan and Shah Rukh Khan as a brand ambassador. Your early users are your brand ambassadors, and make sure they get the right advice and benefits. And once they get to see the value, like they'll automatically start recommending your platform or app to everybody. Like, so what we do at Multiple is. We call it as spend vesting. Typically, people don't invest for the spend, so we brought in a new category called spend vesting, where we tell people to start saving for their lifestyle spend. Can be anything, your shopping, gadget, travel, whatever it is, like, you can start saving for it, and we tell people not to get into debt trap. So these kind of value, when people realize is like, they will start trusting the platform more. And we also registered ourselves as a SEBI registered investment advisors. So whatever the advice we give to people is completely unbiased. So that's another way of validating the product, like, that creates trust automatically. Like, so trust becomes a byproduct when you start focusing more on value addition to the user rather than trying to make quick money out of the users.
Next question specifically to Mr. Akash. Let's dive into the role of the RBI Innovation Hub into fostering the FinTech community. How is it accelerating the progress in the FinTech world?
Reserve Bank Innovation Hub has been set up as a subsidiary of the Reserve Bank of India to promote innovation in the financial services sector. Traditionally RBI has been a regulator for the broader financial services, kind of banking and financial services industry. And now, we wanted to play a role to foster innovation within the BFSI space, primarily because banks and fintechs now have to work together to really bring in the next wave of innovation in the BFSI space. For any economy to grow, and for example, the $10 trillion kind of mandate that we as a nation have, in order for us to achieve that sooner, a robust and efficient and effective financial services ecosystem, banking ecosystem is required. And in order for that to happen, you need to enable frictionless finance. Frictionless finance for 1 billion Indians is the mandate of Reserve Bank Innovation Hub. And I particularly lead the incubation and FinTech engagements, where we are working closely with the FinTech community to make sure that they're ready to engage with banks, because FinTech's primary DNA is to innovate, to create more customized financial services to the two different segments. And banks and regulated entities have the kind of approval to deal with money. So there is a nice sort of match that can take place between banks and fintechs. And to that end, the three focus areas that RBIH has are, one is called Swanari, which is creating women-centric financial products. Second is Tech for the Next $500 million, where we are looking at financial inclusion of underserved segments of the country. And the third one is Emerging Tech, where we are looking at use of futuristic technologies in the BFSI space. And to enable this, we have created an end-to-end ecosystem ranging from ideation to even at the higher end, like accelerating some of these fintechs. In terms of enabling ideation, we are now working pan-India. We are conducting fintech mixers. We've already organized it in Bangalore, Delhi, and we are going to UP in the upcoming month, also looking at Northeast region as well. So lot sort of coming up to activate the fintech ecosystem in each of these cities. Apart from that, we are also providing a platform for existing fintechs to sort of find their first POC or the first customer and subsequently raise their round of funding. And that's where a lot of accelerator programs have come into the picture. We've launched at least 3 to 4 accelerator programs in the last few months. One was called Swanari Tech Sprint in association with IIM Ahmedabad and HDFC Bank. The second one is FinAccelerator, which is in the emerging tech space that I had spoken about. And there's another initiative called Build for Billions Accelerator that we launched along with ISB and Union Bank. So a lot of initiatives that are in the pipeline. We also have a very active VC engagement and engagement with banks as well. So some of these initiatives are in the pipeline. Happy to talk more about it offline as well. Thank you.
Absolutely. Like you rightly said, banks and fintechs need to work together. So my next question to Mr. Jayant is exactly about that. Jefferies is likely engaged with a lot of fintech companies. Could you share some successful strategies for traditional financial firms and fintechs to work together to create innovation?
Yeah. So this is actually a theme that's playing out in front of us since I would say last 1 year and will play out I think over the next couple of years. So broadly, if I were to classify there needs to be three areas of convergence. One is of course business goals for the fintech and the traditional let's say financiers. Second is market need. This is very integral because unless there is a problem to solve, your ability to monetize is very limited. So your ability to monetize is actually directly proportional to the complexity of the problem that you're solving. So the market need is the second convergence that needs to be there. And third is very important, regulatory intent. So this was an area which was not well understood 5 years back. RBI has done a phenomenal job. I think we would be probably the only regulators globally that have proactively given out regulations like digital lending guidelines. They are already talking about giving out guidelines on algorithm-based lending. So RBI is also very proactive right now. And one successful strategy that I can think of to my top of my mind is the merchant lending space, right? So there's obviously first the regulatory intent because you had a lot of MSMEs in India where RBI wanted to really push priority sector lending. There was business goal. These are decent size, ticket size product. The market size is almost 18 to 20 lakh crores. Some of the studies that we had done estimated that. And then of course, fintechs did a very phenomenal job in onboarding almost 6 to 7 crore merchants in India in the last decade. So this is something that the banks, let's say, were limited and were not able to go beyond the traditional 3-4 crore high or let's say large turnover MSMEs. So the fintechs have really brought onto the table and created a digital trail for these 5 to 6 crore small merchants. So this space is already seeing very high growth. We're talking about 100% YOY growth since the last 6 to 12 months, and I don't see this stopping or even moderating over the next at least 3 to 5 years, because as I said, here there's a classic convergence of market need, business goals as well as regulatory intent. So and just one more thing, the traditional lenders, so to say, were earlier a little wary of partnering with fintech. There was this competition versus cooperation sort of playing out. But what RBI has done is it has again given out clarity, what roles it wants the regulated entities to have and what roles it wants the fintechs to play. Because of that, we are seeing more convergence or more cooperation now. So now the traditional lenders are aggressively partnering with fintechs because they are more comfortable of their role in the larger scheme of things. The fear of losing out customer relationship is much less today than it was 3 or 5 years later. So, like I said, this space will just sort of, we're probably at the first wave of this phase. We're going to see a very strong growth in the next 2-3 years between not just the payments or the, let's say, wealth tech players, but across fintechs, whether it's insurance, even vendors who are doing digital underwriting. I think the partnerships are just going to scale up dramatically over the next 3 to 5 years.
So, absolutely, cooperation over competition is the way to go. Talking about this, NPCI has done a phenomenal job in enhancing interoperability among various payment systems. Can we talk more about how different fintechs can work together? I'm sure this comes along with challenges and its own opportunities.
Right. So the fintechs have a very key role as a part of the ecosystem in taking the services to the end customers. To give you an example, like there are fintechs like PhonePe and GPay who have actually taken UPI to the ground level. Right. Similarly, we'll talk about another sector which is like banking. Now the traditional banks are very good in being like a handler of money, right? But they are not good in like making customer servicing applications, right? That is where the neo banks will come into the picture. So they have a very key role to play over there. Similarly, when it comes to money lending, right? There are big finance institutions who have lot of funds available with them, but they are not responsive to a customer servicing. They can't actually go to the end customer and give small ticket loans. That is where small time FinTech companies have a big role to play. So as we go ahead, there is going to be a decoupling between the front end and the back end layer. Like one of the key examples which I can give you is there's an entity called ONDC. May I ask how many of you heard about ONDC? Right? So this is another a lot of people know about UPI, right? But this is another phenomena which is happening right now in India. So the idea of ONDC is to to decouple the monopoly of Flipkart, Amazon, and Google, right? And to enable the local Kirana stores, and he can actually compete with them. So that is a way fintechs have a huge role to play as a part of the ecosystem, and not just big players actually.
Perfect. And with this, we come to an end to our panel discussion today. Thank you to all our panelists for their valuable insights, and thank you everyone for joining us today. It's clear that the future of FinTech is bright and brimming with opportunity, especially with the players in the space. We look forward to seeing how FinTech shapes the future. Thank you everyone.